very soon you are going to start to hear more and more people talking about the calm before the storm. But what is the calm before the storm? What is the storm and what are we going through right now? Well, the storm is going to be an all-out collapse. That is what the storm is. But what is the calm? Well, the calm is right now. Here's what I can tell you. So, one of the biggest banking collapses since 2008, this is starting to somewhat work out. Today we learned that the First Citizens Bank is going to buy a large chunk of the failed Silicon Valley Bank. But for the first couple of weeks, this collapse caused a lot of panic. But that was all it really was, panic. People were pulling money out of the banks. There's billions and billions of dollars leaving the smaller banks, going to the larger institutions, the JP Morgans, places like that. Well, according to them, the influx of new deposits have actually slowed. So this is part of the calm. And don't get me wrong, the crisis is not over, but it is just beginning. Financial experts are now predicting that this is the calm before the storm. But what exactly does this mean? Well, let's talk about that. Before I do that, all I ask is if you can spend just 2 seconds, go ahead, hit that like button for the YouTube algorithm. Let's get right down to it. So experts are predicting that we are not going to experience a massive financial collapse like most people have been saying. They believe there's still a major problem within the banking industry though, but it's not that banks are going to completely collapse and go under. Here's what I can tell you. According to experts, banks are going to have no other option than to tighten lending like we have never seen before. Banks are also going to have to pull on liquidity. Again, what does this mean? Well, once this happens, it is going to cause a massive spending problem for the US, both for businesses and for individuals. Businesses rely heavily on banks for credit so that they don't have to continue to invest into their business using cash. They want to use credit. Why spend available cash when they can use it on other things, right? They can go and open up a line of credit. They can use that credit, which again, if you borrow money from a bank, you don't pay money on that. You don't pay any interest on that money. No, you don't pay taxes on that money. Okay? A lot of the interest, you're going to write it off, right? It's going to be a business expense. They use credit to run day-to-day operations. And many businesses will completely operate on credit alone in order to keep their cash safe. Now, what happens when these banks are going to decide to tighten lending, which they're already doing? Businesses won't get the favorable terms that they were getting before. They're not even going to get the same deals, not even close. They're not going to get anything that they were getting in the past. For example, listen to this. A community member reached out to me and they had this to say. It happened to me too. I feel for your friend that had his Bank of America credit line reduced. I had the same thing happen to me. I started my design firm back in 2013 and have never had any issues with Bank of America until now. All of a sudden, my account was shut, not reduced. They closed my account entirely and didn't even give me a notice. The only way I knew what happened is when a furniture company that I regularly use told me that my account was past due as a result of non-payment. Anyway, if they continue to do this, I fear more businesses are going to have no other option than to close down. That's exactly right. This is part of the issue. This is one of the things I've said. Let's say you work, it doesn't matter what company you work for. If the company themselves are not going to reinvest into their business, are not going to try to expand, and again, expanding in a recession is going to be a very tall task. But think about this. I've talked about this before, and some people said I'm crazy. This is never going to happen. Why would a bank decide to stop lending money when they know that's the only way they can make money? They're going to stop lending money because they can't afford it. Not because they want to. It's because they can't afford it. If people keep pulling money out of the banks, at the same time they're trying to lend, guess what? The money's not there for them to lend. That's the problem. If a business can't continue to operate because they have no cash and they relied 100% on credit lines, they're going to struggle. They're not going to be in business for very long. Banks don't want to run the risk of a business or individual not paying them back. So the fastest way to reduce their risk is to simply close your account. I've talked about this before where I've had accounts closed. I've had accounts reduced because, again, let's say I had a $50,000 account and all of a sudden it gets reduced down to $10,000, right? It's just 20% of what I had. Here's the problem. What if I needed all $50,000 to run my business? And you're probably thinking, well, what kind of business is going to require $50,000 every single month? Well, I've talked about this before, and I even had somebody that went through one of my programs, one of my coaching programs years ago, reached out and said that happened to him. And I think he had like a $45,000 or $50,000 credit line, and all of a sudden it went down to like $7,000. He needed all that because, and I don't remember the exact numbers, but industry norms probably going to be, he makes a return on investment of 10 to 15%. And if that's the case, if he has, let's say, $50,000, that means he's going to make about $7,500 if he's making a 15% return on investment, but he has to spend all $50,000. If he can't do that, he's not going to make that kind of money. And for those of you that think that we can just turn to savings, whether you're a business or an individual, individuals have saved less and less money over the past year. Our personal savings rate is near record lows, and our credit card debt is at record highs. This is not a good combination. But again, we're not over. We're not done. Then you throw in the fact that interest rates are at the highest point on record. This means that we can continue to pay monthly fees, okay, that are out of the norm just because of interest alone. And with the Fed attempting to fight inflation, we're at 6% now. And within the next couple of weeks, we're going to have an answer as to where we are at, for this month. But according to reports, and according to the Fed, they have at least one more rate hike on the horizon, which means if we have credit card debt, it's going to cost us even more. Now, what do we do? How do we get through this? This is a question people ask me all the time, is how do we deal with a recession? How do we deal with bank runs? How do we deal with inflation? The best thing I can tell you is just be prepared. Because even though some people are saying that the problems are all behind us, many experts believe that this is the calm before the storm. And if this is the calm before the storm and we're already having issues, we need to be prepared because it's only going to get worse. So, just wanted to fill you in on what experts are currently telling us. But again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.